you can say what you want to say.
But it's actually Tequila Day. So did you not know that? It's actually Tequila and Taco Day.
Listen, we can't just randomly assign days. Like my favorite Facebook post the other day. Hello, everybody, by the way.
Hi. Happy Tuesday.
Mike Mills and Glenda White here.
With Verity Mortgage.
Verity
Here we go.
Mortgage.
We're talking all things tacos and tequila already.
Yes. Today, we're going to talk about a lot of things. We're just going to ramble for a little while, but for the most part, like, we're going to talk about the market, where things are, what's frustrating about what's happening right now. This is probably a little bit more, a little less polished maybe than we try to be sometimes. We have opinions on things today, so we're going to share them.
That's not good when we have opinions.
So maybe it'll be entertaining at least. So if you want to hang around and hear what we have to say about stuff, or catch it later, if you want to watch this later, you can always do that too.
Hashtag replay.
That's right. But what I was saying is that my favorite Facebook post that I saw the other day was it's like, national daughter, national son, like all this other stuff. And somebody or multiple people are like, you're going to have to just take it from me that I actually love my kids. And that's all I'm going to post right now. I'm not posting pictures of them today. Okay?
Was that your wife?
No. She actually posted something later. She's like, I missed this, but here you go. Like, everybody else is doing it. But
I think every day is a national day of now.
Yeah.
It's crazy. Like it is. I woke up this morning and my phone was blowing up. They're like, hey, Glenda, guess what? It's tacos and tequila day. And I was like, I thought we just had tacos day.
Yeah.
And tequila day. And it's funny. I really don't drink a lot of tequila. It's just sitting in front of me.
Yeah, it's right there. Yes.
But a good margarita every once in a while.
That's right.
Good.
So if any of our friends, realtor partners want to come in and do a show with us, do a podcast, talk about something that you're passionate about, we have booze available for you anytime you want to come in. So
in our podcast room.
Come in and say hello. Yes.
And there's a lot of feedback on that.
They like our room?
They do love it.
Okay.
So that is a kind of a unspoken little thing that we have here at Verity Mortgage to help our agents grow their business is to get them on social media. That's the goal.
Yep.
And so a lot of feedback is like, holy smokes, like it is a full podcast room.
Yeah.
So,
well, and it's easier this way too, because when you do, this is where I struggle with it, like doing reels and all that kind of stuff. Like I'm doing my best, or I'm not doing my best. I could do better.
Good job.
I could do better.
Yeah.
But this is easy.
Yes.
Like I can do this all day long.
Right.
I can't sit down and write out a reel and film it and go like, I should set up a camera, like, cause I did one yesterday that I haven't posted yet.
Yeah.
And I was in here for like an hour and like every other word's an F-bomb because I'm trying to say a sentence and I keep messing it up.
Hey, Gary Vaynerchuk does F-bombs, so who cares?
Yeah. Yeah. Well, I need to just post the raw video of me looking at a thing for 5 seconds and then going blah, 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 blah. And then blah, 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 blah.
You can make that into a blooper because those are always the best because actual content sometimes doesn't go over.
It was pretty hilarious.
Whatever.
So, all right. So let's start with talking about where the hell things are going right now, because we've gone up and down. I mean, it's all over the map to a certain extent. So what are your thoughts on where we are today? And then I'll give you mine because mine are going to be a lot longer than yours, I'm sure. So.
Oh yeah, no, definitely, because Mike always talks longer than I do. You too.
Way too much.
I think the whole world is just crashing down.
Well, maybe not crashing down, but there's some stuff going on.
Oh no, it's hell in a handbasket from everything. Like we got wars, we got hurricanes, we've got shit interest rates.
Yes.
But with those shit interest rates, again, what goes up is going to come down.
Sure.
It's just a matter of when.
Yes.
But it's crazy. I had a lot of first-time home buyers yesterday. Like we're quoting 7% interest rate, size 6s on a lot of that stuff. And they're like, I don't care. Like they were talking an owner financing of what's the difference of owner financing and a regular mortgage. And I said, okay, just curious. What's the today's rate on an owner financing? And she said 13.5%.
Yeah.
I said, then why would you not do an FHA and just pay your discount points to get into it? Just have your agent. She's badass anyway. Have your agent get seller's concessions and pay for those discount points.
Yes.
And she said, oh, that's a good idea. So that's a strategy that we talk about on listing agents and buyer's agents. And I had a couple of our agents this weekend talk about that too. Like I reached out to them and said, hey, have you done the strategy? They said no. And they called me today and said, oh, it went under contract because you gave me that strategy.
Yes.
So this is another reason why to use a local lender. But yeah, anything else, hell in a handbasket, there's Glenda's speech for the morning.
Well, I'm glad you said discount points because I think that's a new reality that a lot of buyers and even some agents aren't realizing that's happening right now with the lending stuff is discount points are becoming the norm.
Right.
And just so everybody understands what a discount point is, Typically in the past, a discount point has been if my rate was 4% and I wanted a 3.75% rate or 3.5% rate or whatever I wanted, I could always buy the rate down, which is why it's called a discount. Because when you tell that to a regular consumer, hey, I'm going to give you a discount, they're like, hell yeah, let's get a discount.
1% is, oh wait, I'm going from 4 to 3. I'm like, no, hold on.
Wait a minute. That's it's a cost. It's actually not a discount on anything other than your rate, but you're paying for it.
Right.
So in the past, that was always available if you wanted a lower rate for whatever reason. Some people just like the gold star on their chest that says they got a 3 in front of their rate instead of 4. Whatever.
Or 2. I was asked the other day. I was like, hell, go back to 2021.
Right. Doesn't make a ton of sense to do it sometimes, but it was there. Nowadays, though, you're being forced to pay discount.
Absolutely.
You don't have a choice. And I never say absolute across the board, everybody has to, because you never know what kind of weird stuff is going on out there. But for the most part, I think you've talked to other loan officers. I've talked to other loan officers. Everybody's paying a discount point. If you have 800 credit, 20% down, conventional loan, you're still paying a discount point.
Or more.
And the reason for this, and I know you've been explaining this to your clients and me too, is there is actually a reason for this. It isn't just because, well, I mean, it is because banks are kind of greedy, but ultimately they have to make money, right? So, and when I say banks, we're a mortgage company, we're a mortgage bank, but we're not like an investment bank. We don't own mortgage-backed securities and invest in bonds and all these other things. We just do loans and give them servicing rights. So what happens is when an investment entity that buys mortgage-backed securities or buys loans, because Bank of America might service your loan, but that doesn't mean they own it.
Correct.
A lot of times Fannie Mae will own it, or Freddie Mac, or some other aggregator will actually own that loan. Well, when they own the loan and they buy it from Bank of America or whoever, they are anticipating on making interest on that loan.
Right.
That's how bank works. So if you do a loan at 6.5%, then the bank is anticipating that they're going to earn a certain level of interest over a certain period of time. Well, the problem with the market right now is it's so incredibly volatile because we've gone up 500% in rate costs over the last 6 months, where it's gone from 3% to almost 7% overnight.
Right.
And because of that, there's so much volatility that investors are going, wait a minute, we don't know what's happening. Are rates going to continue to go up, or are they going to go back down? Because right now, if you're doing a loan today, well, I don't know where it is today, because actually the last 2 days have been pretty good.
Yeah, I did a video yesterday. I'm like, look at the screen.
Yeah.
It's actually going up. I was like, woo!
Yeah, it's good. No, going up, mortgage-backed securities going up, which means rates go down.
Right.
So
inverted yield.
yeah, so that has been good. But let's just say we're talking 3 days ago, and you might very well have a 7% interest.
Right.
It's very possible. So if you lock a loan, you have 7% interest, and then 3 months from now, rates drop back to 5. We're not even talking about going to 3 or 2 or anything like that.
Just a normal number.
Just 5. You go to 5, and that person that bought their house at 7% is going to do what?
Refinance.
They're going to refinance their loan.
Absolutely. Save a couple $100 more.
Right. So that means that servicing bank has held that loan for 6 months and earned 6 months of interest, which they didn't get that when they bought it, or what they sold for it. And then now that loan is gone because it got refinanced and they don't own it anymore, so they're not earning any interest.
Right.
Okay. So what these discount points are forcing people to do is basically you're having to pay interest up front.
Right.
The bank is saying there's a good chance that in the next 12 months you're going to refinance this loan. So we want to make sure that we have a little bit of coverage, that we make a little money off the deal. And that's why these discount points are happening. It's not because of anything other than market volatility. Because if we got to a point, even if the rates were 10%,
someone said that yesterday, and I was like, oh my gosh, please don't. But someone said 10% interest. I was like, no.
It could happen.
It could.
But even if they were at 10%, if we knew, or I should say, if the market felt comfortable that rates were going to stay around 10% for a while,
right,
then the discount points would go away.
Absolutely.
Because the bank would think, okay, well, we don't anticipate rates going down anytime soon, so therefore we're not going to make this happen. Which is even more, to me, a proof to people are out there shopping for homes that are terrified about these rates. The reason they're doing this is because they think rates are probably going to go back down pretty soon.
Right.
Well, and I say pretty soon's relative term.
It could be 6 months, 12 months,
Right.
18 months,
Yeah.
but it is relative. And my first time home buyer yesterday was like, she was happy. She was like, well, if I get in for a 7, like it's better than 13.
Yes.
Like, yeah, absolutely.
Well, and we've presented this scenario to people before too, where we say, okay, buy the house, and the market's changed such that if you're a buyer now and you want to purchase a home, okay, well then what you can do is you can go in and let's say the home's listed for $350. Well, if the home's listed for $350, I can offer, let's say it's been on the market for 3 weeks, 4 weeks. It's had a price reduction, right? Well, your agent or you may think, well, let me go in and I'm going to offer 340 or I'm going to offer 330. And guess what? You could probably get the house for that.
Absolutely.
Okay? But the better strategy is to do what, Glenda?
Just go in as is and get seller's concessions.
That's right.
And depending on your loan type, like this one was FHA, so it's 6%.
Right.
And I'm like, holy smokes, that's almost $30,000, $8,000 on that loan that we were looking at. I was like, well, why would we not do that?
Right.
Instead of the original conversation with the selling agent was they wanted to decrease the price of the home $28,000.
Right.
It was the same offset. And I said, no. You need that money in the bank because
yes.
you need to pay those discount points.
That's right.
And she was very thankful that we had that strategy. She hadn't heard about that strategy yet. So that's why right now strategy matters, and working with local lenders, really it matters, because big banks, apparently they're not talking the stratety.
No. Well, they're just telling you, here's what it costs. Here's what your rate is. Too bad. So sad.
Right. Yeah. It is. And that's why, using a local, hyper focused local lender and real estate agent are more advantageous for you in this market, more than anything. Well,
and the way you can look at it too is if you're getting $10,000, $15,000, $20,000 in seller concession, and real quick on that point, because people are like, well, why would a seller do that? Okay, well, let me tell you why. Because like we said, if the sellers had that house on the market for 30 days, and by the way, realize that sellers, a lot of them still think, but they're thinking, well, I'll list my house and it'll be sold in 2 weeks. Okay. Yeah. So agents are having to really re-educate their sellers and go, hey, look, this may sit for a minute because there's not this bevy of buyers out there that we used to have.
Especially over 500 and DFW.
That market has shrunk dramatically.
I was talking to an agent yesterday, and they did over the weekend, they had a price point of 330 and they had over 100 people there.
Yes.
Well, 330 is kind of like the new first-time home buyer. Like that's kind of their price point now. Right. So of course it is, but over 500 has really like dramatically just they're sitting there. And I can personally say that because my house sat there.
Yes. Yeah.
We were right at that 520 mark and our house sat there, and I'm a lender and I was like, holy shit, like what the heck's going on? We did the same thing. Instead of decreasing the home, we ended up paying points. And when we got the closing disclosure, they paid 2 discount points to get down to it.
Yeah.
So it kind of worked for both of us, where I didn't have to decrease my home and I helped the buyer get into it. Otherwise it would have cost them, $10,000, $15,000 to buy that rate down. And
sellers are at a point where you got to realize, if you're a buyer, that the sellers have had for just the last 2 years, not even leading up to that, 20% appreciation for 2 years in a row.
One house was like 52%. I'm like, y'all, this is not legit.
Well, but my point is that they have a ton of equity.
For sure.
Okay. Sellers have a ton of equity, and it's all, it's not free money, but it kind of is. They just lived in the house and prices went up because of demand and inflation. That was it. So they bought their house for $300,000 5 years ago, and now it's worth $5. Yeah. Okay. So you don't think that if they have to move for whatever, if they've listed their house, they have to move
right now? Absolutely.
For some reason, right?
Sure.
Nobody's listing their house for fun right now.
No.
Okay. They're listing their house because they have to move, whether it's a job or, whatever. So if that's the case, and they have all of this equity that they've already had, that's basically found money,
right?
Then why in the world would they not be willing to give some of that to you?
Absolutely.
So you would buy their house over someone else's. And for agents that are out there listening to this, I would almost, and I don't know how, I may speak out of turn on what the rules on this are, but can't you put in a listing, we're willing to give seller concessions?
For sure.
Okay.
And that's the strategy that we talked to our agents about. And that's what they did. That's how they actually got new buyers to come in.
Right.
It was stalling. They had gone through, would have been the third weekend on both listings that we talked about. No one at the open houses. It was both over 500. And I said, okay, what about this strategy?
Yeah.
And literally they called me the next day and they said, we got a buyer.
Yep.
It's just because the verbiage. So it's not even seller's concessions. Now we're seeing towards buyers closing costs,
right?
Or seller paid towards whatever discount points, whatever your trek is, and on your brokerage. Cause I can tell you, your brokerage is going to ultimately tell you which way to go, agents.
Yeah.
But that is how you want to set up your strategy. And here's the thing. We here at Verity Mortgage have internal programs that can help you do the buy versus sell, do buy downs to present to future buyers.
Right.
And that's what we do for all of our clients, to be able to help figure out, is it worth buying it down? Is it worth paying over asking?
Right.
Because most of the time it is actually worth having seller's concessions and paying over right now.
Yeah. And that's where, because the houses are still appraising, we're not seeing I think this is a thing that people are missing a little bit, is that, and I've said this a million times to people on the phone, Rates have gone up 500%. Okay. Home prices and values have gone down like 3%.
And they're still meeting appraised value.
Right. So it's not like, because everybody it was anticipating it's certainly slowing down. There's no doubt about that.
Right.
But the velocity is gone. But we were so far in the other direction as far as like being a seller's market that we're just
over
slowly
100,000 over asking. I mean, come on. So it was crazy the other day. Someone said it like really good. Would you rather pay 100,000 over asking at a 4% interest rate, or pay a 7% and go in as is?
Right. And get $10,000 worth of cash.
And get 10,000. So crazy enough, when you do the two math, again, that's where finance people, when you do the two together, it came out almost exactly the same. It's mentality.
Right.
It's would you rather pay over asking 100,000 and have 400 people wait?
Right.
Or would you go in as is with a higher interest rate? Your payments are going to end up almost the same.
Well, and then the part that I think people miss on that too is that your payments, but the amount of cash that you're saving, because that 7% rate that you have, you're probably going to have it for like a couple of years.
Right.
And then you're going to get back down. And again, even 5, like even at 5%, it's better. Right.
Mortgage gods, here we go. 5%.
Right.
That's all we need to see.
So as a buyer, there's no reason why you are not in a tremendous position to be able to negotiate something incredibly heavily in your favor when you're offering on a house. Because if I can go in and your house is listed at 350 and the seller gets the same. If you offer $350 and ask for $10,000 in seller's concessions, they're getting $340,000.
Right.
If you walk in and offer $340 with no seller concession, the seller's getting $340,000.
Doesn't matter to them. It's how you present the offer.
It's completely the same to them.
Yep.
And if that means that they're going to get the house sold, okay, yes, whatever. I just need to sell my house because I got another house I'm trying to buy, or I'm trying to move, or whatever. Or we've already reduced the price once or twice, or they don't have any other offers at that time. The ball is very much in the buyer's court
for sure, and it completely flipped since July 1st.
Yes, it has.
And here's another thing on that. For agents on strategies, this is where more than ever you have to talk to your sellers. The greed factor for the sellers has to now become a more evident factor, because the greed can't be there any longer. And now,
maybe it can. It just isn't gonna work.
Right. Well, how long do you want your house to stay on the market for?
Yes.
So you have to price. This is where, again, agents have to do their due diligence, run your CMAs, get comps, do whatever you have to do. You have to go in. I feel like sellers now have a one and done. Like whatever you go and price your home for, that's what buyers are going to see, because now they have options. Buyers have options. I had one this morning that said, well, I liked a couple houses, but they weren't really what I was looking for, but more I know were coming on the market. We didn't hear that 90 days ago, a year ago. Like it didn't matter. But then even like buyer's remorse, like 26% of people that bought their home in 2021 have buyer's remorse and felt that now they want to move.
Yeah.
And they are projecting, when I say they, like Fannie and Freddie and all these economists are saying, the 26% that had buyer's remorse are saying they're going to list their home in the next year.
Yeah.
Because they hate it.
Or that, and they paid $50,000 over list price. So they're really upset because of what they paid for.
Yes. Yeah. So it's kind of like, yes, it stinks to have a higher interest rate, but the ball is in your court as a buyer. You really have the leverage on anything you do on the transaction right now.
Well, it's the same principle as anything else when it comes to, especially even investing to some extent, is if everybody's over here trying to get into whatever this is, and nobody's over here,
supply and demand,
trying to do it over here, which side do you want to be on?
Right.
You want to be on the side where nobody else is, because you're going to have the most opportunity. So 12 months ago, when the market was in a fury and everybody was trying to buy, well, the prices are high. You're having to come out of pocket $60,000 over list price to get the house. Congratulations, you got a 3% interest rate. However, you just put $60,000 that you're not going to get back into that house that you can never see again. Okay. But yes, you got a low rate. So good for you. But now everybody's like, oh, I can't buy a house. Rates are 7%, 8%. There's no way. It's too expensive. But then you dig into it and you go, but wait a minute. You can now buy the house for less than what you were having to pay before. And not only just less than what the list price is, significantly less than what they were having to buy it for.
For sure.
And you can get cash from the seller to say, like I had one the other day, yesterday actually, or 2 days ago over the weekend, where they were offering $330 on the house, and they were, we went through the cost and everything, and the buyer's like, man, I don't know, this is going to be a lot. Like, I don't know if I have this much cash. I thought I could get it from my retirement account or whatever. And I told him what we just talked about, hey, look, get it from the seller.
Absolutely.
And the agent reached out to the seller. They'd already agreed on the contract. They'd already said it was done at, maybe it was 320. And the agent called the seller and was like, hey, they're having issues. They couldn't get access to funds. They had the house listed at 330. So can we just give you 330 and you give us 10,000? And the seller was like, hell yes, whatever. Just, I got to sell my house. Here 100%, you go. And I promise you, if they'd asked for 15, they could have got it.
It probably would.
Okay.
Right now.
So,
and days on market, like buyers need to look on days on market right now, because the ones that we're looking at were 80 days. Well, they're going to give you those closing costs for sure.
Yes.
They have to sell it for some reason.
They have to sell it. So you're getting, like, there's literally circumstances. If you're doing a VA loan, or a USDA loan, or even if you're using some sort of down payment assistance, which a lot of those have dried up. If anybody doesn't know, all the special programs that you used to hear about all the time for you first-time home buyers getting these special programs, those are down payment assistance programs, and 90% of them are gone. There's a few left, but they all come with catches. But I want to be clear, they're beneficial if you need them. You just have to understand what the terms are. But in those cases, you're getting cash for your down payment. You're paying a cost. You have a higher rate. You got to hold on to it for 3 years, blah, blah, blah. But you're getting money. Okay. So if you have a USDA loan, a VA loan, or you're using a down payment assistance and you're getting the seller to pay all your closing costs, how much money are you bringing to the table, Glenda?
Nailed it on a lot of that.
Zero. You're not bringing any money.
Okay, I'll stay in my house for 3 years. And oh, wait a minute. Let me have this natural appreciation that if in the event I did have to sell or refinance in the 36 months, well, again, it's free money.
It's free money.
Then you just pay it off. So there's restrictions, but even on those down payment assistance, they're the same rate right now, which we haven't seen.
They're not the same. They're definitely higher.
They were 7.125 yesterday.
It depends on the day, right? Because they're moving. Used to, you could say, oh, well, this down payment assistance is 4.5%, and it would be that way forever.
4% difference. And now it's like 1/8%.
Right.
Well,
but you got to hold it for 3 years. But like you said, if you get the appreciation, that's cash you pick up, pay it off. But buyers are in such a stronger position right now because of all this.
So great.
And it's crazy to me how terrified people are buying a house because, and it's, you know what it is, Glenda? It's our fault, honestly, as an industry, as mortgage
100%.
lenders, because we've made people focus so much on interest rates because that's all. It's like the lowest common denominator.
What's the rate?
Yes,
what's the rate?
That's
what's
all
the
we
cost?
sell. Well,
I
can't do my job because the rates are too high, or this company's got better rates. Or
why do you have 3.125 and I have 3? Well, what are they offering you? Are they going to pick up the phone on Sunday?
Right.
Mike and I will.
But the point is like we've trained people to be this way. We've absolutely told people, hey, this is what you need to pay attention to. But we've negated all the other aspects of it. And so now we're in a place where rates are high, okay, but everything else is down. Right. And so again, if you bought a house 12 months ago, in a lot of circumstances, you were coming to the table with $60,000, $70,000, $80,000.
One of our clients was 215.
Right.
I was like, holy.
And that's not because you're putting half down on the house. That's not why, because you had to pay over.
They paid over asking $215,000.
Right.
I was like, I hope y'all love it. And I texted them the other day and they're like, we love it. I was like, how's that money? And they're like, well, we should have waited. I said, exactly.
Well, and now it's turned, and now you can buy that house and not have any of that cash, and you have a higher rate. But it's, what are we talking about?
But it's your home, and you can refinance.
$100, $150, $200 a month.
Not a big change.
Look, I don't want to pretend like that's not a lot of money because it is for a lot of people. But what I'm saying is that you don't the 20 grand that you were going to have to come out of pocket to buy. Put it in your bank account and hold it and use that, pay with that extra $200.
Because with the shit show of economy it is, you need that right now because we don't know what's going to happen.
Right. So I shared my theory with you the other day on what's going to happen. So this is what I want to have record of this. This isn't the alien theory, by the way.
Oh, okay.
No, I'm not going there. But if anybody wants to know about my alien theory,
check on Area 51. Call Mike Mills.
Right. This crazy guy over here talking into the microphone. Okay, so here's my theory. So my theory is. And you got to stay with me for a second. This is a little convoluted, but
here we go.
So right now, there's politics involved in this too. Whatever your political affiliation with, I don't care. I don't like either side. So don't ask me. But so right now the Democrats are in power. They have the House, the Senate, and the House of Representatives. So midterm elections are coming up on November 14th, or 15th, and so we're in a situation where inflation's high. The economy is not great. Everybody hates what's going on. You've got lots of other social things occurring that I'm not going to get into, but basically for the most part, nobody's real happy with how things are.
Right.
So there's a very strong sentiment that the Democrats are going to lose control of the House and control of the Senate. because they're going to get voted out, which is not unusual in midterm elections when you have an unpopular regime.
That's normal.
Even when you have popular presidents, it still happens because
people
get
States government for you.
So it turns all the time. So in order to the whole goal of being in politics is to stay in power. That's the whole goal. They're not there for you. They're not taking care of you and your family. They don't care about you. They want to stay in power, tell you what you want to hear, so you vote for them again. So what has to happen is there has to be a shift in the sentiment of people from the Democrats' point of view in order for them to keep the House and the Senate. Okay. Because otherwise they're going to lose. And then we're going to be in turmoil for another 2 years until the presidential, because we're not going to get anything done. Because then you're going to have a president who's a Democrat and House Senate's Republicans. They're going to be fighting against each other where it's nothing.
And that's normal. Like that's
it's going to be the normal American politics where absolutely nothing happens. So except we all get screwed. So anyway, so they have to figure something out, right? Mm-hmm. Well, Glenda, I think I've asked you this before, so maybe you know the answer when I'm leading you in this direction. But regardless of what's happening in the world, what is every single American's number one priority when it comes to how they vote? Do you know?
No.
It's a broad range thing, very broad.
What are you talking about?
Well, like when someone says, I'm going to vote for this person or that person, what is typically their motivation for why they're going to vote for that person? And like the number one issue that all politicians...
Abortion.
No, no, it's not abortion.
I was like, what are you talking
that's
about?
certainly an issue, but it's not the issue. The issue is always the economy. Always. Yeah. Okay. If the economy's good, everybody's happy. If the economy's bad, everybody's mad, right? Regardless of who's in power. So it's always the economy. So that's the number one focus that everybody has. If you have high gas prices, high inflation, you're going to get your butt kicked.
Which gas prices are great. Like,
they are right now.
They're back to 289 because OPEC, there's another meeting.
Well, yeah, OPEC and Russia are about to have another meeting and cut back supplies very heavily. So there's a big expectation that gas prices are going to go up again.
Right.
Which is bad for the powers that be that are in power currently. So the Democrats have to do something to get the economy at least perceived to be turned around, right? Well, I don't know if you saw the other day that the Bank of England, who is the central bank for Britain, they went back to quantitative easing.
Yes.
Okay. Yes. Now, to be clear on what that is, quantitative easing and raising and lowering rates are two different things. Okay. Right. What quantitative easing or quantitative tightening is either buying government bonds or selling government bonds. Right. Okay. So the reason mortgage rates have been so low for such a long period of time is because the Fed has been buying mortgage-backed securities as a buyer, which have kept the prices up, which kept rates down artificially.
Right.
And so we've talked about this before. Them raising rates doesn't have anything to do with mortgage rates.
Not.
I mean, it impacts it, but it's not directly.
It's not the sole impact.
Correct. It doesn't directly correlate.
Right.
So the Bank of England has also been raising rates, not at the same degree that we have. I don't think. Yeah, I think we've raised it the most of everybody.
Yes. We have.
I might have some of my facts wrong, by the way. So if they are, it's fine.
Yeah, we're talking about Bank of England. So God save the Queen or God save the King now, I think is what I'm.
God didn't save the Queen. She died.
No, I got God save the King now because that's the new
that's
one.
Horrible.
There's to my British family. There you go.
So what the Bank of England did is because they were having margin calls on all of their pension funds, which are tied to bonds because bonds were just collapsing, that they started buying bonds again, which is that quantitative easing. Quantitative tightening is I'm selling, quantitative easing is I'm buying.
Right.
So they started buying bonds again because they didn't want their bond market to completely collapse. I mean, that's how close it was apparently. So
and ours is probably not far off.
Well, maybe. So the idea is that one of the number one things that stimulates the economy is housing. Okay. Housing is something that drives GDP because of
$45 trillion industry.
Right. Home Depot, Lowe's, plumbers, electricians, blah, blah, blah. So, so the thought is that they have to do something related to the economy. Well, inflation numbers, we've talked about this before. Inflation numbers come out, which is everybody's been paying attention to, the CPI. It usually comes out the 13th of every month from the previous month.
Right.
Okay. So on October the 13th. Okay.
Week and a half. We'll be doing another live.
Yes,
there we go.
We're going to get inflation numbers for it's a year over year revolving number. So this September's number will be put into play and last September's number will be dropped.
Right.
Okay. So they replace each other. So the September inflation expectation for this year is that it's going to be down some. but the inflation number of last September was also pretty low. So the expected overall change is expected to be very negligible because there won't be a big adjustment. So it'll still be inflation still happening. We're going to still raise rates, right? That's what we'll hear in a week and a half, and you'll probably see the rates move again, and mortgage-backed securities will tank and whatever. We'll be crying on the phone again.
And we'll be drinking.
Yeah, we're drinking tequila.
Look,
so
I just want everybody to know we talk about it every week, but it still hasn't been open. So
yes, it hasn't been open.
It hasn't been open yet.
We're close. There's a bottle of Crown over there that's been opened. But I think I brought that from my house.
There you go.
But anyway, so then what's going to happen is we're going to get those numbers in October. Well, then in September or November, okay, that's going to carry October's numbers because it's from the year prior. Well, last October was the first real uptick in inflation that we saw.
Absolutely.
Overall, the CPI number jumped up in last October, month over month. And so the expectation is that this October's number is going to be, I don't want to say substantially lower, but quite a bit lower than that number.
Right.
So when you replace a lower number from a higher number, then you're going to have that number go down. So then what's going to happen is come November 13th, okay, we're going to get a CPI reading that says inflation is going down.
Right.
Okay. Then once they say inflation is going down, that's going to give the Fed the ability to either say, well, we're going to stop raising rates, indicating that the market is getting better,
right?
Or they're going to go back to quantitative easing and start buying mortgage-backed securities again, which may drive rates down. Now, that's what I think is going to happen because what happens 2 days after November 13th?
Yeah, it's midterms.
Well,
and they're also talking about, I heard yesterday that instead of raising it another 3/4 basis points, they're talking about a half basis points too, and less because the economy. And it's also it's a 12-month look back, but the inflation numbers, some of those are actually a 9-month look back. And so you have
they do core inflation for food and gas where they look at a little bit tighter numbers.
Well, and here's what's crazy. I was talking to my mom and stepdad yesterday about it, and 13% of the U.S. Americans are now self-employed. So we were kind of getting into this debate about the
U.S. Americans. Is there other?
Whatever. There's Glenda-isms. The U.S. So the Americans out there, the Glenda-isms, because Patsy's got her Patsy-isms. But when we talk about the unemployment numbers, well, they're completely skewed because these people, of course, the unemployment numbers are not going to go down. Why would they file unemployment if they have a self-employed business now?
Right. They leave the job market. They're
152
not unemployed.
million Americans are now self-employed, which is 11% of the workforce.
Yep.
Well, it was 7% of the workforce.
Right.
So just think about those unemployment numbers. Oh, unemployment numbers are down. Well, no, they're not. They're not up either.
Well, they're just not being calculated.
They're not in the calculation
factored in.
They're self-employed. It's like everything else. Like it's only a partial.
Now, I will be clear in my opinion on this is that I that's my prediction. I don't know if it's going to happen. I mean,
so here we go.
Just here
midterm. So November 13th and then November 15th. Look on those 2 dates.
Right. Because I do think that that'll give the Fed and the Democrats the ability to say, oh, look, the economy's better. Go vote for us. I don't think it's going to work.
In a day and a half.
Right. But but that's how it works. I mean, everybody's attention span is like 5 minutes. Like there's no extended
30 seconds on video.
Yeah, they can't give any news that happens today. You know, I think there's something about Herschel Walker's family because he's running for Senate in Georgia, and that's one of the races that they, it's contested. I pay too much attention to this stuff, but he's having issues because it's coming out that he had extramarital. Oh, really? Football player in the NFL?
Right. Come on.
We're all shocked. Okay. So, but either way, like that's what's going on over there, and they are, that's a story that's happening, right?
Right.
Well, if in a month from now, something else occurs that doesn't relate to that directly, well, then it won't. What happened a month ago isn't going to matter.
Right.
Like they don't care. So this news has to break like right before the election because that's what people are thinking about when they go to push the button.
Let me change it. Oh, it's been so amazing for you. No, it hasn't.
Right.
Come on.
Well, it hasn't. And my other point to this is that
aliens are coming.
No. Well, that's a midnight podcast, Glenda, with a little bit of Crown in me. Then you get all my
we
real
should
opinion.
definitely do that.
But no, what I think is that it's going to be short-lived because I do still think that we are not all the problems that we've had and that we are having currently are not fixed. Right. And just because now, because I start seeing today on Twitter about, we may have hit the bottom and now it's time to buy back into the market stocks. I'm not talking about real estate. And I'm like, I don't think so. But because there is still room to go down, at least in that realm.
But where's the best place to invest your money for the return of investments?
Real estate, 100%.
It's real estate.
Yeah, always.
Like it's crazy. A lot of investors, a lot of people have said, should I buy an investment? Well, yeah, if you have 25% down, hell yeah, it's the right time to buy.
And I got news for you. They're not making any more houses. Okay.
So someone, because again, we like to follow a lot of stuff. 5 million homes is what we're behind for last year.
Yes.
We have to build 5 million homes to even
catch up, to get to healthy market.
To get to a healthy market.
Correct.
Well, they're not shitting out homes
and you know
right
what,
now.
And you know what housing starts? So they have different types of housing starts. They have the overall housing start number, which again, this is how you can skew statistics and numbers.
Right.
They have an overall housing start number that includes everything related to housing. Right. And housing starts are permits that are applied to start building a building.
Right.
A building. So when they include all the numbers, like, housing starts are way up. Well, they are, but the housing starts for multifamily homes, apartment complexes, duplexes, townhomes,
through the roof.
Those are way up. What is down or slightly up is single family, the house that everybody wants, the neighborhood, the yard, the land. Yep. So the reality is that they aren't making any more of those houses. No. And the minute that rates go back down, home prices are going to shoot back up
for sure
because the demand's going to be there again.
Supply and demand.
Yes.
And it's crazy. Like I never loved economics in high school, but it's like I'm a nerd now, I guess, because I've been lending for so long.
Yeah. You don't have a choice. You have to pay
I don't. But it's crazy. Like, so I even tell my now 19-year-old, which is crazy. Like,
you're so old.
I know, right? Shut up. But economics is something that it should be taught more in high school because those are the ones that are going to be buying homes.
You know, I agree with that sentiment, but then when you think about what you're saying, I disagree with it. And the reason being is that we don't even like the fact that teachers teach our kids anything in school.
Well, that's true. They don't teach them how to do cursive. That's for damn sure.
So is that who you want teaching them, how to balance a budget? I'm just saying, like,
no,
probably should be taught in the home more than anything. Although it's not like I'm going to take away from teachers. Teachers are awesome. My problem is that they're way underpaid and they're undervalued.
Absolutely.
And it should be one of the highest paid professions in our world.
For sure, 100%.
If we're going to put our kids, with a group of adults every day to essentially raise them for 8 hours of the day, when we spend 3 or 4 hours of the day.
Yeah, they have them more than we have our own kids.
Right. Wouldn't you want that? I mean, isn't that the person you want to pay the most amount of money to make sure that we have like the best people?
So teachers, we love you here.
Yes.
I'm just going to go ahead. You are underappreciated. And I don't think you get told thank you enough. So thank you from the bottom of our heart.
100%.
And admin, like I can tell you, even admin, like everybody in that industry, y'all are unthanked.
Well, and I just think we put too much pressure on teachers to be the responsibility of teaching our kids everything, and then we way underpay them. It's like I can't think of it. There's a comedian that has like a bit about how we're giving them all of these responsibility and like paying them the least. It's like, would you tell someone to guard your house from the militia coming in, and you're paying a guy with a pop gun that's standing in front of your house $5? It's like, no, like. Yeah. Give these people what they're worth.
I will tell you, the best form of education is having a lender as a parent or someone in economics. Because my kids walk in, and especially my 8-year-old, she's like, I need to talk to my client.
Yeah.
And when my 18-year-old last year, she was in high school, and they did talk about in the economics, she was like, I know what an APR is. And I was like, well, there you go. You know what to balance your budget. So just because thinking about it. So there you go. If you ever need a profession, get into economics and start talking every day.
Well, I mean, I tell my kids all the time, there's 3 ways to make money. Okay. You either trade your time for money, which is having a job, right? Yep. You start a business, and run a business, but you're still trading time for money. The difference is you can just scale it better. Or you use money to make money.
Absolutely.
Right?
Passive and earned income.
That's right. So using money to make money. I
did a video on that yesterday.
Then you need to understand how money works and you need to know how it all fits. And so like it's boring and people hate it. And I totally understand it. It's not, but I don't think it's boring, but that's just because I'm a little bit more knee deep into it. But it is incredibly important to get your kids as much involved in finances as you possibly can, because it's going to set them up for the rest of their life.
Absolutely.
To just have a basic knowledge of how things work. And you don't have to teach them, derivatives and high level investing, when they're 15. Just teach them how to budget, teach them what interest is on a credit card.
Right.
Teach them about student loans and let them decide if they want to go into $300,000 worth of debt to get a home economics degree. Maybe they don't.
Absolutely.
Maybe they should go be a welder. Maybe they should get a trade,
And trade schools are so good.
Yes.
It's, and now that I have a college student, it's more like I'm more in tune to it.
Yeah.
But, it's crazy to see the amount of money, the difference of the schooling when it all comes down to the piece of paper.
Yep.
Like the piece of paper, yes, will ultimately end up, but as long as you have that piece of paper, doesn't matter what school. You could be paying $100,000 or $30,000, and it's ultimately the same education. So
the only exceptions to that are like if you're going to be a doctor or an attorney or engineer,
like
you get to go to Harvard. Yeah, but that we're not talking. I don't have anybody in my family that's doing that. Yeah. Okay. Like my daughter's not going to Harvard to be a
and we completely squirreled
engineer.
On finances.
I know. Well, I don't want to go to. We're 40 minutes in, so we need to cut this out. But we'll catch this, or we'll pick up again on this later. But the bottom line, Glenda, tell everybody, it's buy a house. There's nothing. We're saying, please buy a house. We're lenders.
And here's what's crazy. Like the bottom line is the first time home buyers, they're scared. I understand that because they hear, and we haven't seen 7% interest rate since
20 years.
Yeah,
it's been 20 years. It's been before 2000. That's when I was looking it up the other day. It was like 7% in 1999.
Because I know when I got in the industry, it was 6.875 is what I got into it. So it was there, and then it dropped to 4 the day after Thanksgiving in 2007, 8. But they're scared because they don't know. But the unknown factor is we keep coming back to it, and it's the rent factor.
Yeah.
Rents are still going up. And even the conversations yesterday, that's why the client that came to us was like, I need something because her rent was doubling.
Yeah.
So we have to think about that when taxes are going up and insurance premiums are through the roof right now. Your renter is going to your rent lease agree, whoever it is, they are going to increase that no matter what.
Yeah.
And a lot of at that time, it becomes a scramble. So why make it a scramble if we can start the process 6 months, 9 months into your lease to know that? And the one this morning, bless his heart, he was like, yeah, my lease is not up for 10 months, but they already told me it's tripling.
Yep.
Well, we need to get your shit in line today.
Yes.
Like it doesn't matter. And there's no time frame that says 30 days, 100 days, 12 months.
Just because you talk to you on Wednesday doesn't mean you got to buy a house next weekend.
Yeah. So, and for future home buyers, like there's no time frame that you need to wait.
Right.
Like that is our job. That is what we're here for, is if it's 12 months, 2 years, we need to get a strategy and a game plan for you.
Yeah.
So there you go.
All right. Well, that's enough for us rambling on today. I'm sure we'll be back at this again sometime next week or the week after. So please tune in. But if you guys have any questions or you want to talk about strategies on how to offer on homes or the best approach and how much money you're actually going to need and what's happening, call Glenda or myself, and we'll be happy to walk you through it. There's never a point where you're committed or, you have to do anything. It's just a conversation. It's just educate yourself on what's happening in the market, what your options are, and then make your decision. Our job is to provide you information so you can make your own decisions. 100%. And that's what we're here for. So.
And you're making the payment, not us. So we need to make sure you're okay with that payment.
That's right. All right, G. Well, thank you very much. And we'll get back to helping people on the phone.
There we go.
All righty. See you guys.
Later.